trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to talk here about the U.S. dollar and the euro here for a second before Rich comes up. He's connecting up to Skype, hopefully. But the big news today was, yesterday we hit the exact 382 in the dollar index off of this high. And then today we made a new low, breaking out that long-term weekly low here. And look at this. Now we're back above that number again. Now, the only way I look at this, because I don't follow the news, folks. The news doesn't follow me, so I don't follow it. So here's the high that we made. I just look at ABCDs. They've sold me well, but there's your ABCD pattern right here, and there's the low right here. Now, what in the heck would somebody think if that were to be the low? Because the low was 105.85, and the low was supposed to be 105.83. Oh, it is the exact, no, this is 105.81, and it was supposed to be 105.83, and it had a pretty good rally. Now, that's what I'm doing, folks, when I'm doing these things, is to try to see what's happening. Now, there is a possibility, now it's a strange one, there's a possibility that this could also be a three drive to a bottom pattern. As you can see, now this is a daily, so if we just blow this up a little bit, just do a little tiny bit of work here on the computer, you can see you drove this over and look where it comes in today. Now, I don't know if that means anything or not. I don't know, but the one thing we can do is go to the euro and see if we can get some confirmation that maybe it made some type of an obscure high today. Let's get this up here, and it'll be ready to look at. And we'll put this up here also on the daily so we can compare coconuts and grapefruit. Here we go. Oh, my goodness. Shut the front door and raise the rent. That's exactly what's happened so far. Look at this. We've had a new breakout here in the long-term daily here. What's this number up here, boys and girls? Tell me, what is that number? Johnny, pick up that placard that you show me all the time, that 0.382. I'm not sure because this is such a long time back. I've got to go look at it. So let's do it together. But I think this is what happened, just like we did, just like that same pattern that we had here went right there. So that's what we're watching here right now. We got a nice rally going in the stock market here so far today, folks. So let's hopefully that continues because that's what we like to see. All right, now let's move on here. This is this. Now let's get this out of the way and we'll look at this euro together. And so we just take a quick look at it. I want to see what that 382 is. I got to move it way over here. Oh, my goodness. If this is the big one, shut the front door and raise the rent. Oh, my goodness. Oh, my goodness. Oh, my goodness. Oh, my goodness. Look at this, boys and girls. This is really, really hard to believe. Can you believe this? Look, from your low way back here in January to where we are today, look at that number right there. We've just hit that just a second ago. It's still hitting it right now. And what is that number? That is the 382 off of the high we made in September, for goodness sakes. I would think that means something, but, who knows? I'm just an old country boy here from Terre Haute, Indiana, having a lot of fun, doing what I love to do. And there it is right there. There's your 382 if that's the case. So pay attention because this might be a big reversal type of day. So I'm just looking at one at a time. So let's look at the British pound since we're in this area of these things. And I know the British pound popped up. Whoa, it's still popping. You can see it pays no attention to that U.S. dollar. This is where we gave up the ghost here. Then we had a pullback. We lost a little bit on that trade, but that failed. See, that 382 looked like it was going to hold and didn't. But then look, we had a 3-day pullback. Look at that 3-day pullback right here. And I quit. See, hey, folks, when I get stopped out of something, I give it to the other people, let them have some fun. I want to go something that I can understand. So if I was looking at this, after that breakout right here, let's just follow to see if the market did one of those things we like to see. And what did it do? it stopped at the 382. Oh my goodness. I was a poet and don't know it. I make it rhyme every time. So the pound is still going up. Looks like you could get all the way up here to 129.5, folks, without too much trouble on the daily pattern, correct? Now, there's a lot of stuff going on in the world about the tariffs and stuff. I don't understand it, but Rich Anderson does, and hopefully he'll be on to talk to us about that. I just look at the charts. I got a bunch of degrees, folks, but my degree is in ABCD. That's all I do. So I don't do anything more than that, and I don't intend to do anything more than that, because that's what, keeps me in the game, and that's what's really important in all this that we're watching here, okay? So let's get this out of the way here. I wanted to show you something here, folks, because something really significant is happening right now, and I'll show you. We were thinking about this, and look at this, folks. Look at this. We're almost, believe it or not, folks, we're almost at the 61% retracement of the high of last night. Now, what are we doing way back here? Bang, bang, bang. Let's take a look at this. There's where we are. AB equals CD. And there, our 382 will come in today right up here, believe it or not, at 58. Look how fast we've come here, folks. This was the real key here. The real key was when this thing took off. And remember, when it started to rally, you can see the move right here. Where's the first pullback? Hold it. I can show you just a second. I think I can. I got it here somewhere. Oh, Johnny, what did you do with that darn thing? Hold on just a second. My little grandson is over here helping me today. And there it is, folks. 382 is what you want to do. Keep an eye on that, folks. It'll tell you when the trend is going to change and when you want to get out of Dodge. That's basically what you want to be watching, okay? Now, as you can see here, we have pulled back. Let's see what our pullback was from our low right here. There was your first sign that this thing was getting ready to pop. Now, how high is it going to go? I don't know, but the fact that we made this number is very important. What's more important, what happens is because the Russell, which is second highest of all of the indices we have, there it is right here. You can see it started its move right there. There was your first 382 right now, and boom, boom, boom. Look at this bottom right there. You see that 1050? Let's go look at this on the weekly, and you think ABCDs don't mean something? There it is right there, 1060. We're at 1089 right now and rising. This might be a bottom. In fact, I had some psychic experience today with our good friend over in Europe, and he said, I am almost sure this is the bottom right now. As I live and speak to you right now in the eyes of my mother, the timing was within 5 minutes, folks. Kid's got talent. Anyway, that's what we're watching here right now. Let's get a couple others where a lot of things are happening good, folks. So let's keep, and I don't care whether the market goes up or down. I'm interested in how, well, I do care when I'm short. I want it to go down, but when I'm long, I want it to go up. But that's what we're watching. We're going to talk about I've got to straighten this out a little bit. I'm covering too much here, waiting for Rich to be on the line. I wanted to cover the crude oil market because it's starting to possibly make a little move here. Here's one of my losses today, folks. It wasn't much, but had a pretty good run in it for a while. And anyway, this was I was looking to sell the crude oil right here, and took a 30 pip loss and did take a loser on that one. But we'll look at that when we come back. 877-927-6648.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, as we look at this is the June Treasury bond. They're into June now. That's the main one. This was happening, folks, before the market started to collapse. That pattern was completed, A, B equals CD, right there. That was a June. And if we counted the number of bars up in this run, you'll see it's a little shy. Let's just draw it in here so you can see it from your low to your high here was 17 days, 17 trading days. And this one was over here, as you see. This wouldn't come out until later on. But remember, time is the most elusive thing. We're looking at price. And look at that. It went right there to it. Now, I want to show you the action because I happen to be in this thing, and I wanted to bring it to your attention here. We'll get up here. We're going to look at it on a smaller time scale. There was the early morning high right up here that we saw, okay? Then the market came all the way down, rallied up a little bit, and then look what's happened since that time. Now, if the market was really going to crash, the flight to quality would have been bonds and in notes. But that wasn't happening this time, not like it was on January 24th. Now, let's take a look at the Treasury notes, the largest of all of the commodity things that we look at. And we're going to do the same thing on the daily. You're going to be able to see this one on the June also. And look at this. You can see this. This is what we call a, what do they call? Oh, this is a hanging man pattern. And look at it. We went up to a little past the 1.618. And look, this is a perfect example, folks. Look at the AB equals CD pattern here. The AB equals CD. Look how the CD pattern went much, much higher in the Treasury notes, but not in the Treasury bonds. Come on. Oh, boy. Sorry, folks. I've got Rich Anderson. Rich, are you on the line, buddy?
Yeah, I am. Can you hear me?
I'm sorry, pal. I'm trying to talk too much and not thinking. I didn't see the notice that they sent. So let's get back to the old soybean chart. I'd like you to tell the folks.
So I'm learning.
Yeah, right. Yeah. After 59 years with me, buddy, and me with you, I don't think that's learning, folks. Okay, let's take a quick look here. I'll bring up the May soybeans here and tell the folks how these tariffs, because it had such a great pattern today in the bean. And I spoke with Rich about 4:30 this morning, and he said, well, be real careful today because of these things with the tariffs. And this is what I was looking at. Explain to the folks what's happening with the tariffs and how it affects these markets.
Well, I mean, there's cross currents going on everywhere, but take the Chinese, as I explained to you last week, they delisted a bunch of exporter companies for meats, right?
Mm-hmm.
You have to get licenses in order to export into China. Well, so China decided they delist 3 grain companies. Well, there's only about 3 grain companies that are big enough in the United States that would ship quantities of grain to China. So that's all, but that's basically giving you an embargo, and it's tit for tat, and you just gotta let it shake out. We're going to come in here. The May is the lead volume one, but then very shortly, everybody's also going to be focused on the November, which is the new crop. And you'll notice that the Mays are starting to gain on the Novembers, and that particularly today, and that shows you that at some point the price is right and people want to start accumulating. But until then, I think I emailed you a couple of charts, and there's a rule called the Rule of 7 that my buddy Rick and your buddy had, and and I think Jimmy used it. Well, I know Jimmy also used it.
21 was a big believer in it. Yeah, that's for sure.
Yeah, and anyway,
it's been a year this month, buddy.
I know.
Yeah.
Anyway, it has price targets in the corn. Now, it doesn't have to go to there, and it's low probability, only like 25% chance, but they're clear the heck down there at 415 in the corn, and the price counts on the beans are at say 920 roughly. So that gives you a little pause. What I had talking with one of your buddies the other day about the wheat, I thought that it maybe was in need of taking out the lows and having a flush and rinse, as John Hill used to call it. Nowadays they call it a liquidity sweep, which is a little more sophisticated term. But it's the same idea,
Sure.
Liquidity sweep. And indeed, when I told him, he was long wheat, and I said I'd sell it at 590, and it's gone down a little bit since then, and it's done that flush and rinse or liquidity sweep. Now we want to see the market show us that it has evidence there, and I think that's the first one that I'd have an eye on, because it'll be the first one that the weather will treat with a problem here shortly, and then the corn and beans. Corn is normally a May or June kind of thing, and by July it's made or not made, and then the beans are August. So weather is going to be a concern. We've had I'm back in Minnesota. I flew back last night from your old stomping grounds, Beverly Hills, and we've had a very dry winter, and we're supposed to get a little snow or rain tomorrow, but then next week it's 50-degree temperatures again. And it's going to be interesting. What you can say about the weather is when it does change, it tends to really go big for a sustained period of time. And so maybe that it go big and starts to have a bunch of moisture will be when they're trying to get the corn and beans planted, particularly the corn, and they'll have problems. But that's weeks off. So right now, the one that's got my eye that is kind of already reached the 25% probability of a flush and sweep that it's done is the wheat. And I do have some technical indicators I use that indicate both on the dailies and weeklies that we've done enough on that. On the beans, let me look at the Novembers. Al said he could even teach me how to share a screen someday, so I might do that. I also have those on the beans.
It took 2 months from
because I have lots of colors on my charts. They're real pretty, and I have them on both the May and November beans, and I'm looking at the D's corn, and I have them on the D's corn. So the conditions exist for a change in trend. So that's the first thing I look for, and then I look for the market action.
Listen, Rich, we've got to pay a few bills here in just a minute, but I was speaking with Byron this morning about this bean because we're getting ready, to plan a campaign. And I want to go to your memory bank when you came to visit us in Chicago once, when we were in Chicago there. And there were four of us, Mark Douglas, myself, Rich, Byron Tucker, and I can't remember the other guy's name.
Bryce?
One of the yes, that's right. And we were sitting
the other
there.
Guy was Bryce.
I remember the guy came up to us. He was a pork belly trader. He said he needed to make $1 million in 3 months. Do you remember that story? And Byron, you and all sat there. We had to tell the folks about this because it was really exciting. Stay tuned, folks. A little bit of history coming up. I think you'll enjoy it. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archive live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back with Rich Anderson. Rich, I can't believe this. I pulled up the monthly chart of soybeans, and I went back to 1983, and I'd already done this. we were sitting in Marty Brutman's office there at the Merck building when you came to visit us, Byron and I and Mark Douglas. And all of a sudden, a guy came up to us. Was it Rick Barnes? I don't know who it was. The guy said, I got to make $1 million in 3 months. And we laughed. And Mark said, oh, it's real easy. He said, just catch a market that's going straight up and you can do it. And so we were looking at beans. And this is a 3-month correction. Right in about the time was. You can see it was right around, I think it was around May 1st. Is where it was. And it made this beautiful retracement, much like we're doing right now. And Mark told him, he said, look, he said, just buy beans, and every time they go up 20 cents, buy more and buy more and buy more until you get to $1 million and cash out. In 2.5 months, the guy cashed out with over $1 million, and we're still waiting for a pullback. No, I wasn't quite that bad. But look at this thing went straight up. I remember that like it was yesterday. And Byron called me this morning to ask me about, do you remember that? And I said, yeah. I said, I'm going to be talking to Rich today. And he said, yeah, we were all sitting there when that happened. But that was really something. What happened here, folks, was I think this was El Nino, wasn't it, when the hot weather really hit, Rich?
Yeah, and, it was a weather play that drove
it. Weather play. Well, look, we had another one back of those in 1980.
If there's a lot of supplies, then it's easy to have an embargo and not buy from us. But if all of a sudden there's a weather problem, they'll buy all they can because
they'll buy anything, that's for sure. But anyway, some of these moves have been, quite spectacular. And anyway, listen, I want to thank you for being our guest today, buddy. It's always good talking to you. Byron said to say hello.
I heard you talking about the bonds. I could hear you, but you couldn't hear me, and I happen to agree with that. I'm kind of looking for them to, the bond guys have always technically been the smartest guys in the room, and they know what's going on. So you keep an eye on that. But I've got a lot of things, and I'll learn how to share a chart. And next time we'll share a chart. And you'll like all
they
my
have
colors.
They have them on computer now. You don't have to use your ticker tape anymore.
Yeah. Well, I once was having lunch with John Henry, and he told me that, he didn't trade cattle because he's a vegetarian and, other things that animals can do to you. But he still did them by hand. He did his charts by hand because he could get a better feel for it.
I do. I tell people that all the time to do it by hand. You can really get a feel for what the markets or what the patterns are saying.
Yeah, but that's the hardest part. The time is you're right on the ball with time. One thing that Bryce and I came to conclude was it wasn't just retracements in price. But when you had retracements in time and price that were together, we called it pattern perfect. And
that's right.
So now that I know how to use this, we'll get the next step charts, and I'll talk to you again soon. We're
going to be doing that soon because we got a big growing season coming up. Does John Henry still own the Red Sox? I think he does, doesn't he?
Yeah.
That's what I thought. Yeah.
His dad used to take him to the ball games, just like going to movies this year thing. His dad took him to the ball games, so that's how he got interested. So I
use Netflix. I don't go to the movies anymore, Rich. All right. Listen, thanks for joining us, buddy, and we'll talk to you soon. Okay.
You bet. Bye-bye.
Okay, you bet. All right, folks, let's get back and take a look at that chart we were looking at here with the, let's get this out of the way here for a second. That was I think we were watching was I think it was the Treasury notes. That's what it was. Let's get the Treasury notes up here. I wanted to show you why, well, my opinion, of course. So now remember, there was a big difference here between the Treasury notes and the Treasury bonds. Remember, the June bonds went to the exact number. The Treasury bonds extended. The reason why, folks, this market is 6 times bigger, and it took out the highs of December. Well, we can only make a 61% retracement of the bond, so you want to sell the weakest, the best one to do. Now, when I see something like this and it exceeds, in fact, it went above it 1, 2, 3 days in a row, the first thing I do is I go and I check to see what the expansion number is going to be. So I move over and check that CD. It's going to be 127. I move that over, and you'll see there it's supposed to go to 11.25, and there was your high, 11.23, so it was right on the money. Now we're starting to correct. And that's telling you that there wasn't really a lot of problem with the market, because the bond market and note market, that's real money, folks. The stock market and futures market, folks, those guys are playing with leverage. They don't do that in the bond market. So that's why that's so very, very important. Let's move over here and get these charts back up so we can see some of the things, see if the market is still going like gangbusters. It should, given the fact that it had this reversal. Let's get this up here, put the cascading up, and we can see where we are here. Here we go. Yeah, we're still having a pretty good rally. It's way up here to 03 now. Let's see, how high did we get? We got as high as 27, so that's pretty good. Now, these are the ratios that we were watching for today. The high from right back here, you see it pulled back almost to the 618. It missed it by just a heartbeat. Okay, now look what's happened. Now, I know this is only a 13-minute chart, but this is how I look at the markets. If I go to a 4-minute chart, okay, now here is the first suggestion that the market was going to have a good rally right there. That was your first suggestion. Why? Because guess what? We had a big run up, and it took an hour, just about an hour, for it to make that pattern right there. There's your 382 coming in right on the money, and that tells us we're going up here today. Now, whether that's going to be the case or not, I don't know, but we had another good correction here of 20 points, and let's just see if that did the 382 from your low up to your high right here. There it is again, right there exactly at the 382. So as long as you stay above 57.92, it's got a chance, to really move higher. And the reason why I say that is the fact that Russell, which had been the weakest of all, finally made a pattern of some kind that may or may not mean anything over a longer period of time. So those are the ones that we're watching here right now. I have to check the clock here. We will look at some of these stocks like NVIDIA and some of the other things that people have been watching, but I have to we've got a long time to do that. Let's just do NVIDIA right now since we've got that in the ratio for today. NVIDIA starts with an N, doesn't it, Larry? There you go. So you're getting you back to your A game. Now, here's the key to NVIDIA. There's where we had yesterday. Okay, wow, it's still getting the hell kicked out of it or whatever. Anyway, you can see here was the key. Remember, wait a minute. It's not the end of the world for NVIDIA yet. Well, we came down, and look, we've rallied back quite a bit. Here, I don't trade stocks, folks, so don't hold me to this, but there's an ABCD here, ABCD. Let's just check and see if it works, okay? Let's just get her right here. AB equals CD, and there, whoop, it's supposed to go to 107. It got to 110. It's 116 right now. But why this is showing as an up day, hello, operator, you got to be kidding me. These are down days. I don't know why it's doing that, but I'm not a stock person. I'm just using the Instant program, and they use delayed data and all this stuff, and I don't want to do it. Now, let's be right back. I want to talk about Tesla just a little bit because it's in the news because of its founder, Elon Musk. We'll be right back with that, and then we got some things to talk about. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I want to talk about Tesla for a couple of reasons. One is we had that low here that was so perfect here at 72. If you remember, last Thursday we had that giant rally on Friday, and I said if we go below that, it looks pretty bad. Well, you saw what happened to the rest of the market. But look what's happened now. It's gone and it's closed the gap from way back here, Thanksgiving last year. Okay, and now we're almost back to the buy point again. Now, the low today was $10 lower, but it's had a little bit of a rally in here. Whether this means much or not, I'm not sure. It still looks bearish, but the fact that we're having a pretty good rally today with the fact that maybe this low we have in NVIDIA, let's try that again, Larry. The low that we had in the Russell 2000, which is the second largest of all the futures. The first is the Dow Jones. The first is the S&P. The second is the Russell. The third is the NASDAQ. And the fourth, of course, is the Dow Jones. And Dow Jones is fun to trade because it's basically only 20 of the triple-digit stocks. I've been asked to take a look at a couple stocks, of course, that we always look at. And one here is Apple. And I want to get this up here and take a look at it. And then we're going to discuss wheat just a little bit more because I've had 3 people ask me about the wheat market. And we're going to go look at the charts and try to fit together with what Rich is looking at. Okay, now here is Apple. Look at this, folks. Now, this is bad data on this day right here. I'm just going to delete this because it's bad data. It doesn't really affect very much. But I want to show you, we had the 135 pattern here the other day, okay? Look at that. That 1-3 pattern held even. Let's just refresh this. I know what's going to happen. It's going to screw this up again. No, there it is. It did okay. All right. So there's where low. We had the high. There's where we were. Had the rally there on Friday. Okay. Excuse me. There's the rally high on Friday. There's Tuesday, Monday. Here's Tuesday. It's holding here. This is another reason it's telling you that, look, this is a 1-3-5 pattern, and it was flat out spot on. Look at this. When exactly it opened $8 lower, folks. If you remember that, it opened. I think if you saw this on an hourly 13-minute, you'll see it opened $8 lower. Boom, bang, bang. I mean, somebody picked somebody's pocket. That's for sure. That had to be a big fund or something dumping some, and boy, they did dump it. They dumped it right back to them for sure. And then since that time, you can see there's Monday's high, and then today, all we've done, it's still a little bearish because all we've done today is go right up to the 382. Well, it had to hit 50%. Still, looking a little bit negative from that point of view. Okay, now we'll get rid of here of the NVIDIA and one other stock to take a look at, and I'll be with you here in just a moment, and that is Goldman Sachs. Where are you, Goldman Sachs? Here's Goldman Sachs. All righty. And that is down to, this is one of the reasons why the Dow was down 700 and some points at one time. Let's see if it stopped at any good spot here from December 16th. It stopped today at the 786. That's another good sign that maybe this is a good, but the market's oversold in Goldman Sachs. We're down 1, 2, 3, 4, 5, 6, 7 days. Those are pretty much outlier events, because remember, you can have a day where it's down 13, but most of them usually down 3 to 8 days. Anything past 8 days, you have this to worry about, and this is a pretty big rate. The other thing you want to look at is with this big drop from 670, drops $100, we want to find out what the 382 is on the way back. So we take the 60-minute chart, pop it up here, draw this over here like this, and we'll see, oh my goodness, guess what, folks? We see an ABCD bouncing around here. Let's just do it for our new listeners. Okay, this is what the market's done. As you can see, it starts down. There's your first 382 retracement. There's your second one. This is probably the third one. Let's just move that over here like this. And there it is right there. And what does that tell us? It tells us we should have made the 1.618. Let's see how close we came to it, just for kicks and giggles. Okay, your A point is right here. There's your B point, there's your C point, and folks, a $500 stock, and it comes within $5, so that might be pretty good. So we got to watch what happens here the next few days, because the market is down hard. We're very, very oversold coming in today. It's Tuesday. The market's bounced back quite a bit, and whether it still does or not remains to be seen. But we've got other things. We got a fish to fry in some of these things. So let's get on with what I needed to talk about today, and that we've covered the dollar index. I wanted to go and talk about the soybean meal, folks, because this is one of the most important commodities in the world. It's how they get the feed for everything, and I'm going to put up July soybean meal. This is, meal for this that's going to be. It's already been planned. See, I sold it here this morning and I covered it here. That's known as a bad tick, folks. So what we're going to do is go to a 4-hour chart, and you can see it's still making new lows, and we're getting really ready to buy this, folks. Meal has not been this low. You can see way back here, we got as low as $2.96, and it's only, $10, less than $10 away. So what we're watching for is on this long-term chart, of the weekly chart. We'll just get this up here. I want to show you, because see, when they switch over from contract to contract, I'm not going to be able to use that. I'll just get back to the daily. You know what I'm going to do? You can bear with me here. We got to take a break here. I think I'm on a break now anyway, am I? Oh, 2 minutes, and oh my goodness, hold on 1 second. I got 2 minutes and a half in this. I forgot about that. Hold on, let's get up and we'll look at the December meal. And all I got to do is move this around a little bit and move this over just a little bit and make this SMN, make that a Z, and put that as a 5, and then open it up. But this is going to be new crop soybeans, folks, the ones that haven't even been planted yet. They'll be planted soon, but not yet. Let me refresh this. And this is the one where you can have the really big moves. Okay, here's where we go. July and December, those are the ones you want to watch. And here's the December. So you can see here, we're coming down really strong. Okay, now we're almost at, we're just about at the 78% level right here. Okay, there's where we're watching. All right, now, it's a strong seasonal tendency, just like we were looking at the July soybeans. There's a strong seasonal tendency to them to turn around March. Could be as late as April, though. So that's why you've got to budget yourself. If you get stopped out on one or two, you got to keep waiting for it. Keep your losses small. It's not about how much money you make, boys and girls. It's about how much money you don't lose, and therein lies the rough, okay? And rough is the operative word, okay? So this is what we want to be watching. We're going to be watching December, and we're also going to be watching the July. July is old crop. December is new crop. So it's going to be exciting. Like Rich said, we haven't had a weather problem in the United States in 4 years. That's the longest. I'm talking about growing condition weather. I mean, some of this cold stuff, that's different. But I'm talking about hot, dry weather across the belt, the Midwest belt, Indiana, Illinois, Iowa, Kansas, Missouri, all that area. They'd get 3 or 4 hot days, 3 or 4 weeks of hot weather with no rain, and the yields on the soybeans drop 30%. And stop and think of a soybean crop that's 30% less than people are thinking about. That's when you get those meals, those contracts that go $5 a bushel higher. $5 times 5,000 is $25,000 with a margin of 2,500. I think it's got my interest. So that's why we want to be watching it this time of the year for sure. We're going to be looking at soybean oil. That's been one of our favorites. We'll be talking, we got to take a break here, and we'll be talking about soybean oil at the last, and then we'll wrap it up.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is soybean oil, folks. This is, oil, cooking oil, paint, and all this other stuff. It's got so many things, margarine, all that stuff is related to this. Anyway, you can see the ABCD patterns. But what I want to show you is this. You see the move here between 42 and 49. That's 9 times $600 or $4,200. Folks, the margin on this is only $1,100. This is a tremendous amount of margin that you have. And if you catch a move like that with just a small amount of margin, it's a lot. And you can see they follows these patterns really nice. This is what we're at right now. We're sitting right here. I'm watching it trade a tick at a time right at the 61% retracement. So I figured, well, maybe I ought to buy a little bit and put a stop down here. Only have to risk $180. So I took a shot at it right here at 43.34 and put a stop at 42.28 or 42.88. So I'm not risking very much. Now this is bad news, folks. They've announced that China is going to stop importing soybean products. If you believe that, folks, you're telling me that 1.7 billion Chinese are going to stop eating soybean meal and soybean oil. They love tofu, and that's what soybean meal is. So that's just all part, like Rich was talking, it's just all part of the malarkey that goes on in the news. So that's pretty much it. I would like for you all to send some light out to my friend who passed away a few days ago. My old poker buddy here had 2 of them in the last month. And so send out some white light for them. They lived a great life, had a lot of fun, but it's always nice to have somebody on the inside praying for them. So remember, all these are suspect to loss only, folks. It's not how much money you make, it's how much money you lose. If you follow that, you're going to be okay. But if you caught a move like this and bought it all the way up, that's a lot of money with very little invested. And that's what we're going to be looking for coming this spring here, because we've got spring planting coming. We've got the equinox coming on the 21st. Live every day in an attitude of gratitude, and may God bless.